Welcome, welcome everyone. Happy Tuesday today. A bit of a different day than we normally do the briefing. So, welcome back. Great to have you with us again, Laurent and Sophie. How are you today?
Awesome. Thank you for having us.
Amazing. Hey, we're gonna dive right in. As every month, we want to take a look behind the actual headlines of the Swiss startup ecosystem, and we want to discuss them and analyze them together. As a little warm up, let's start with you, Sophie. Did May confirm what we or you expected last month, or did it change your view on anything?
I had a busy May personally. We had San Francisco Climate Week, which is always a big deal, like having the whole climate tech investor, a startup community coming together. I don't know, 75,000 people in the city or something. Really, really crazy. And then at the same time, just 2 weeks later was Zurich Climate Week for the first time. So we did both. We had an event in San Francisco and then an event in Zurich with vitamin C, and it was cool. Like on one hand, it was very cool to see these conferences or these like weeks is always great to see. Oh, there's so many of us, like building in climate, investing in climate. You feel like there is like true momentum, even though the rest of the world maybe doesn't see it that way. But you in that bubble, it's like great. And then also seeing the difference between how things are done in San Francisco and in Zurich. It was quite different. Like in San Francisco, it's very much a VC startup tech event. In Zurich, it was, the opening was at the Opera House, which was very nice, but it was a little bit more established, a little bit more corporate, a little bit more of, sustainability people in corporates talking rather than just on the startup side. So yeah, no, it was great to see the both worlds. And then I don't know, in climate tech too, that it's not specifically a Swiss success, but maybe you've seen that what Frevro had an IPO. So the biggest like climate tech IPO in history of climate tech, a $10 billion IPO, which is great for the climate tech ecosystem, right? Finally coming some cash back to some of the LPs, to some of the investors, also having a big signal, which is good. And I think there's some good Swiss success stories too. I think we're going to talk about them, right? Some good exits or at least like bigger rounds that show there is like, Switzerland can compete with like US speed and scale, at least with a few examples, which I think is great. And I think we've been like looking at these examples over the last 4 months. And yeah, I think Switzerland has very good indications that at least in the kind of deep tech industrial AI, we can definitely like, you know, be world leading or continues to be. So that's great. Yeah.
For sure. I'm always impressed by how much stuff happens when we, talk from one month to the next. And then sometimes you think like, oh, do we have enough to talk about? Yeah, we actually do. There's a lot going on. Laurent, to open also up with you after this month's number, like it's not only May, but also parts of April, of course. Does the Swiss funding market look stronger or just a bit more concentrated, as we already discussed in previous episodes?
I don't think too much changed in that regard, right? I think it's still very concentrated on the same areas. So I'm not going to repeat all of that, but mainly AI, some deep tech, yeah, biotech. That's about it. So I think in that regard, it hasn't changed that much. But what I see is the same as what Sophie said. I think there are more indicators that not just bigger rounds are possible, but there's more IPOs being talked about or happening. There's more bigger sales happening. So I think there's starting to be a bit more cash rolling back into the LPs pockets and in the business angels pockets, and I think that will at some point start adding fuel to the fire again. So I'm hopeful.
And that's sort of the flywheel, yeah, exactly, starting to turn, and then hopefully these funds will be reinvested again. Let's dive into the first topic. We had a few big rounds, and also I want to talk about where the capital is actually going. Just to pick a few, we had Windward Bio, 165 million round. We had Candu AI, 225 million Series A round. And one thing that is really impressive from my perspective is that the Canton du Vaud, the beautiful French speaking part of Switzerland, they raised already in Q1 alone 430 million Swiss francs. And that is nearly matching the Canton's total full year of 2025 in funds invested into startups. So I would say we're off to a pretty good start. And Sophie, when we look at it, one company raising 100 plus million or even 200 plus million, one Canton nearly matching all its previous years in total annual fundraising. How should we read this without getting carried away and getting too excited about the Swiss ecosystem and the Canton du Vaud specifically?
I mean, I think it's all great news. Like we said, like these are the signals that show that we can build global companies from Zurich, right? And when you said matching the Canton Vaud, do you mean also they're matching the finances in terms of an additional investment that comes into each
No,
of those companies?
basically, we look at
But
the Swiss Venture Capital report, right? So
yeah.
there you have the cantonal split.
Okay,
And
how much
basically,
was raised in this canton? Yeah,
exactly.
I
So
guess
in
also
Q1
speaks for
alone,
EPFL, right? It also
for
speaks for
sure.
EPFL, which
Yeah.
is also great, like because it always feels like kind of the little sister of ETH, right?
Yeah.
But we actually see lots of really interesting companies coming out of EPFL, and maybe still globally a bit overlooked behind ETH, but I think they're catching up. Yeah, which is also great.
100%.
Yeah.
And Laurent, we already also addressed sort of where the money is going in previous episodes, but now we see it's going into AI, obviously, the hot topic these days, but also biotech, blockchain, and infrastructure related businesses, especially also again with ties to AI. What do you think, or why do you think investors are responding to these sectors right now? Is it just the hot topic and there's a real FOMO that they are sort of, oh, no, we don't want to miss out. Let's just pay whatever. So we have a foot in the door.
I think it's still the same. Yeah, I mean, AI is still the hottest. Infrastructure that has to do with AI is quite hot, or actually heating up, because of all the improvements that need to be made on that front, to be able to create the supply for all the AI demand that we have on the planet right now. And then biotech has always been strong in Switzerland, right? And AI is actually not weakening that; it's actually adding fuel to the fire, because you can do certain things much faster now in the analysis process. There's things that are possible that were not possible a couple of years back. So I think those are all sectors that are still AI centric, or at least fueled strongly by AI. That's where the money is flowing to, and I think that's going to keep like that for the next foreseeable future. I don't think that's going to change anytime soon. I mean, the biggest one is obviously Claude, and from Anthropic, everyone's trying to get into somehow being able to invest into Anthropic because they're growing so fast. So, like that's sort of, that's the one that everyone is looking at right now, and then from there it just trickles down. Everything that is some sort of in the tailwind of this Anthropic wave, that is interesting. Everything that's outside of it and is not biotech is currently just not being looked at, unless you're like Sophie, a very specific investor in one very specific area.
Yeah.
I have a question. Did you guys look into that Candu AI deal a little bit? Like, I realized only because of this that they actually started 2011. So it's not actually a Series A, right? They've raised 150 million before that. I think they just, with that clear pivot into like AI infrastructure, I think they just labeled it a Series A, which I guess is also a bit marketing, right? I don't know how you see that.
I mean, fundraising is also a sales process, right?
Absolutely.
You have to position yourself the right way. So if you see, oh, the AI space is hot and it's easier to get money from investors that way, why not pivot and reposition yourself as an AI company?
And also label it as a Series A. I thought that itself is also a bit of a marketing. Yeah. It's like, wow, we're raising 200 million at Series A. Like, we're the rocket ship, right? Yeah. I mean, it's great. I'm not criticizing.
Everyone is doing that at the moment, like there's no. When I started fundraising 12 years ago, it was like you try to get to a Series A as soon as possible in the naming. Because it suggested that you're big, and now everyone's trying to keep it as far away as possible. It's like now it's the friends and family pre-seed, and then there's the pre-seed, and then there's the second half of the pre-seed, and then there is the seed. And the seed actually back 15 years ago would have been a Series C by now. But I think everyone is just trying to keep it as early as possible in the terminology, to make the rounds so big that you create this FOMO of people thinking like, oh, this is a deal I should be on, right? So that's a bit, I think it's a lot of marketing. I mean,
yeah, and it's also
Yeah, go ahead.
Sorry. No, it's also to what you said, like this concentration of capital also means that only a few very big rounds are going to be successful. So you want to be part of that, right? That's
Yeah.
0.1 and not just a good company. So like showing that you have this massive big round means you're
Mhm.
one of these very few
Mhm.
selected
But I
companies.
think
Right.
there's a lot of bingo bullshitting going on in startup land at the moment. I
Sure.
mean, even Y Combinator, I think, gave out a memo to their startups of how they are supposed to report ARR, because the way that people report ARR these days, it just makes no sense anymore. So I think there's a lot of labeling and marketing going on right now. Yeah.
That was funny, right? That you sort of make something that actually normally in under normal circumstances would be a very hard science to measure your ARR. Has become sort of an art with all the marketing and sort of the framing and is it now revenue or not? I mean, that's just a bit of a signal of crazy times, in my opinion.
Absolutely. It shows
And
that, yeah, it
no,
shows
no,
that
no,
we're going
sorry.
into very, very hot waters right now. And I think there will be, I don't think there's an AI bubble that's going to burst, but I think at some point there will be a correction.
No.
Yeah.
I mean, to be fair, Sophie, right? If you look back a bit, before COVID or during COVID, we also had mad valuations that were being paid, like 500x valuation multiple on your revenue. Like you needed to have really, really stellar growth to then actually live up to the expectation that you set up there. Are we not just like falling into the same trap again where we are now hyping everything up? And then at one point, many companies will just die out or do down rounds because they cannot live up to the expectations that they're now raising on. But a few will probably become very big and just pay off for some investors what they invested in. How do you look at that? Is it a bit of a deja vu that we have and experience now, similar to the COVID times?
I mean, some valuation craziness for sure, but it's actually quite different. I think 2021, you had lots of companies that would get these valuations. So you could be a good company and get to a great or amazing valuation. Now it is way more concentrated, right? Like I think I tried to look at some data, but I think somewhere between 60 and 70% of all venture capital globally goes now into AI and its AI infrastructure. And of that, again, 60, 70% in 5 companies, right? And I think a
No.
consolidation like this, we have never seen before. So these companies are doing really, really well and nobody else can raise. So we have
Mhm.
also companies in the portfolio where we actually see, hey, can you you know, focus on like getting revenue and getting profitable because now is not the time to raise, so it really depends. Are you part of that one cohort like Laurent said in the anthropic kind of value chain, or if you're not, it's actually pretty hard. And I think 2021 was different. 21 was just like raised valuations for everyone in a way. Yeah.
Good
And we can
point.
see that very
Yeah.
clearly with our
Yeah.
clients at Holy Code, right? 2021, everyone was hiring, everyone was
No.
going
Hmm.
crazy. So it
Hmm.
was really, there was more demand than we could even cover with our own offering. And now it's very punctuated. There's a very few ones that are doing great, and everyone else is, as you said, Sophie, really trying to just be profitable, to find a way
No.
to survive the time. And then in 2-3 years, hopefully be in better waters. But yeah, that's a big question. Will they be? I'm not so sure.
And we'll see the job market too, right? Like, I don't know, me and the very personal circles, like I have never had that many friends in San Francisco, in Silicon Valley looking for work, because either you're like in that AI stream or you're not. And
Yeah.
so nobody else is hiring right now, right? Or for no other roles is hired right now. So
Or even
that's
the opposite, they're even firing people. I mean,
yeah.
in Europe, also in Switzerland, it's like either you're in one of these fast growing AI companies and they hire left and right, or they don't hire or even fire people. It's crazy.
Yeah. Yeah.
Wow. Okay, we have another topic to get to. You mentioned the big
Hmm.
players, classic OpenAI, Anthropic, etc. There's also one big player in Europe, Mistral AI, and breaking today, it's not directly a Swiss startup, unfortunately. However, there is a co-founder and CEO there, Dennis Just, who has made and left his marks in the Swiss startup ecosystem. So Mistral AI is acquiring Emmy AI, the basically Austrian-based startup into physical AI and large engineering models, where they're really pioneering with their research. And the rumors say, we don't know what is true, we'll find out soon, later this week. The rumors say that it has been a mainly share deal, very little cash, but about a 1 billion valuation, which is kind of crazy if you look at that from a European perspective. And first of all, big congrats to Dennis and the whole team to pull that off. I think it's an amazing milestone. And also, sort of the second big AI success story after the whole OpenClaw movement that also started in Austria. And the guy just basically moved to OpenAI and moved to San Francisco. So, very interesting to see what is happening there. And I wonder, with your perspective, Sophie, from the American angle with a Swiss perspective on it, nevertheless, how do you read this as a Swiss early stage investor? Do you think that this is overall good news for Europe to have such an exit? Or is it a bit like, okay, what do we make out of that? It's also a lot on in shares and not realized value for the investors. How do you take this exit announcement today?
So MEII isn't that old, right? It's a couple of years old. So yeah, makes me think, right? That means potentially they just had a really good agreement with Mistral that they can keep building what they've been planning to do on a larger scale with a bigger team, with more funding inside of Mistral, instead of like raising their own money and like building the company on their own. So I assume there has been good alignment within the founding team to like, hey, keep building what you're doing, but doing it inside of us, right?
Yeah.
So I think that was probably the incentive. And then, yeah, if it's just a shared deal, then hopefully so they're just become a bigger portion of Mistral rather than getting cash for what they've built so far. I think it's good for the European ecosystem, right? We have like global competition going on. So if we're building our own big companies and with the focus on more industrial AI, I think is a good bet because, consumer AI, we've lost already, right? That's happening in the US. So Europe could really build something on industrial AI, which I think is the strategy here. General sounds like a smart move, probably from both ends. As an investor, you just become like, if you're an investor now in like MEAI, just means you're becoming a shareholder in Mistral. So it's just a share translation and you're a new bet. But
Right.
yeah, it's not in that sense an exit, right?
I wonder about that investor perspective, because sometimes, this looks like a big win, but maybe it's not. And sometimes it doesn't look like a big win, but it actually very much is from an investor's perspective. In the end, you need cash to pay back your investors and make the money, right? So when are you excited about the share deal and when are you not from an investor's perspective? Because obviously now there's another upside, but there's also not an actual liquidity event that pays out your investors' money.
I mean, you just become an investor in Mistral then, right? And so that depends how you judge that as a potential investment, right? There is no general answer. We had that a couple of times already in the portfolio, right? It's more like a M&A type merger. And then what happens is just you become shareholder in a new company. And it's not a company that you've picked, right? It's a company that your founders have picked selling into or a collaboration. So yeah, could turn out really well or could not. But it's not in any way a liquidity moment for your LPs. So yeah, it's interesting. I'm hearing more and more of my fund colleagues to really think about, secondaries and things like that, because then this would be a good moment to potentially sell at secondaries for a company like Mistral,
I talked to Dennis quickly today because he's a close friend of
Oh,
mine. We
cool.
worked at Dine Deal 10 years ago, 15 years, 20 years ago. I don't remember even. He wouldn't give me much, to be honest with you. So all I know is it's not only a share deal. That's the only thing I know. I
Okay.
don't know any percentages. And what he also said is they wanted to go with a European solution. So they wanted to go with Mistral. They also, he didn't say that, but that's what I heard in between the lines. They probably also had interest from America, from the big ones, and they specifically wanted to go with Mistral as a European player. So yeah, kudos for that. I really like that to see that they're going for that. And I think, as you said before, the investors will probably be happy because if they're investing into AI companies like MEAI and they get to hopefully $1 billion valuation within a couple of years, and then become part of the biggest European AI provider in Mistral at the moment. I think this is, in terms of being on the right track to having this one bet really returning your fund, you're probably on the right track.
Could be worse. Yeah, for sure.
Yes.
And thank you for the additional details. We're going to do a live stream with Dennis on Thursday this week to
Ooh,
also
cool.
go behind the scenes a bit. So I'm going to challenge him on that. Let's see
Very
what he
good.
can share on the record.
Cool.
But giving that perspective, Laurent, I also wonder, Dennis, he was very active in the Swiss startup ecosystem. He founded companies, he worked in leading positions in other companies.
Yes.
He's a close friend of yours. Then you see him doing that and pulling that off in Austria, just across the border. How does that make you feel as from a Swiss perspective?
Well, look, Dennis, he originally is German, right? So he came from, I don't know where exactly, but now he's been living in Berlin for a long time now again. He was in Switzerland when we were at Nine Deal. He was founding Knip in Switzerland and then moved it to Berlin afterwards. He was one of my first customers at Holy Code. So I love the guy. I love everything he's doing. He's an incredibly smart person, but he's at the end of the day, he's not a Swiss, right? He loves the country. He always says that he wants to be here, but he's German and he's rooted in Germany. So it's, for me, being so close to him, it doesn't really hurt to see whether he does it in Switzerland or Germany or in Austria, because it's just a massive win for him and for Europe as a whole. And I just applaud him and the team for what they've been doing. Me as a Swiss, yes, obviously I would love that he's still here, but I gave up on that 10 years ago when he moved back to Berlin. But yeah, obviously I would prefer that he's in Zurich or Zug or whatever and building it from there. But I think in the end, it's just a massive win for the region overall.
For sure. Yeah, and he's an amazing guy. Every time we do something with him, whether it's a podcast, an event whatsoever, he always brings so much experience and wisdom to the table. You always feel like you should take notes and then walk away and try the stuff that he's sharing. It's amazing.
Yeah, he's highly intelligent, and I think the people he now works with are also just machines. So those guys, they're doing something special.
Absolutely. Sophie, if you look at another transaction, there was a Neuralab. I hope I pronounced it correctly. They were basically picked up by a US buyer for around 23 million US dollars. And it feels a bit like a repetitive signal that we have come across over and over again in these monthly updates, where we sell maybe too early, the technology gets picked up by a US buyer, and then they commercialize it. And most of the value, not all, but most of the value generation then happens abroad on a different continent in the US. Is that the same thing that is happening here? So we're basically feeding the US machine with our great technology and sell too early?
I mean, yeah, I mean, from a VC perspective, a $23 million exit is a write-off, really, most likely, because the valuation of the company is somewhat close to that. I don't know the details of the company. I also tried to look up, I don't know how much they actually raised and by whom. So it doesn't look like they raised a lot of money. So maybe for the founders, it actually made lots of sense because they probably didn't have a lot of investors. Like, let's say they still had 80% of the company or so. It might be really, really, meaningful for them. From an investor perspective, not so much, not so interesting. And same for ecosystem, right? This is way too early in the sense of like, actually building the tech here and selling the product and creating the company and an ecosystem around it. But yeah, hopefully the founders had a successful exit and can continue what they're building with inside the US player. And hopefully it spills back some into the ecosystem. If they had big ownership still, it might be enough to do some angel investing at this stage. Yeah.
So
Hopefully.
I know Matteo, the co-CEO, is a very close friend of mine as well. So
good.
when we looked at the news, it was like, okay, what's
All your
happening
friends.
in my circle right now? They're doing better. But yeah, love it. I don't know too many details. I'm also not allowed to share everything, obviously. But Florentin, the main founder who originally started it, I think he is still one of the biggest shareholders, if not majority. I don't know the details, but so for him, that's what we talked about the last one or two times, right? For him, this is life-changing. I haven't talked to him, so I don't know, but from my perspective, this is me speaking, not anything I've heard or seen, but this is life-changing. For him, that valuation that he got, yeah, but I guess, Sophie, as you said, for a VC investor, that would probably not be a great result in that sense. But I think them being now part of a bigger company, for them it made a lot of sense from what I've heard, and I wish them lots of success. I read the news release, and it said that I think more than, or maybe half of it is a share deal. I'm not exactly sure anymore, but you could read it online because it's a publicly traded company. So I think a lot of it is now down to the success that they will have in the upcoming years together with their new owner. But yeah, made a lot of sense for the main founder. And I think, Silvan, if you haven't had him on the show, that's someone you should also interview, because I think he had a
100%.
very, very interesting career up until this point.
Yeah, 100%. And I have a key learning to take away from today's session. You just have to be close friend with Laurent and the exits will follow.
How do I do that then myself?
I don't know, but you have some magic aura around you, because everyone that you're close friends with, they seem to have an exit these days. It's amazing.
Yeah, I mean, right now, that's crazy. It's not usually like that, but being in the startup industry for 15 years, you start to hang around with the same people more and more. And yeah, by design, at some point, some of your closest friends will have amazing moments in their career. But I also know how both of them have gone to really, really dark periods. So I'm just extremely happy for both of them, whatever it was that they now got out of it. But I'm extremely happy, and I root them on to go on and do even bigger things in the future.
For sure. So before we continue with the next topic, I also want to give a quick partner shout out, because the event is happening after tomorrow on Thursday. The Swiss Startup Days are back in Bern, Switzerland's leading deep tech catalyst event. So if you haven't secured your ticket yet, I think they are the last ones available online on startupdays.ch. And in the evening, there's also going to be a Swisspreneur Founders Dinner as an official sort of side event after the conference. So make sure to sign up to both if you're in town, if you're around, if you haven't done so yet. Next topic I want to talk to you about. We're going to stick around with AI for a little bit, and also this Swiss-US connection. There was Cerebras Systems. They did an IPO also just like last week on May 14th, 5 days ago. It's one of the largest US tech IPOs in recent years. They raised $5.55 billion at $185 per share. In the opening, the share actually just doubled, which is insane. Like they probably left a lot of money on the table for the investment bankers right there. But it's kind of crazy. And the cool thing there is there's actually an EPFL alumnus. Jean-Philippe Fricker is the co-founder and chief system architect of the company. And he was there on the picture ringing the NASDAQ opening bell. So also congrats to JP and the team for pulling that off. But the core question is, again, hey, they went public in the US. Again, also a pattern that we saw over and over again over the past few months. Laurent, is this just another example of sort of top talent, brain drain moving from Switzerland or Europe in general to the US to get the full commercial success that is simply more difficult to achieve here in Europe?
I think commercially, and we touched on that the last one or two sessions, it just makes sense. It's the place to go to. But I saw today a study that showed where are the people happiest. And top 50 cities, I think, 45 of them were European cities, 3 were Japanese, one or two were oceanic, actually New Zealand. And then there was, I think, 1 from Canada and 1 from San Francisco. Okay, so maybe Europe was only 43 or something out of 50. But when I saw that, I was thinking about, yeah, probably that's what's happening right now. So you have to go to the States at some point to be successful, or to be the most successful in what you're doing. But if you can choose, you would probably stay in Europe, because the standard of living and the way that you can live here is much higher. And I think that will not disappear that quickly. So the question now is just, how can we build around that so that you don't necessarily have to go to the States in the future, or that you go there and you come back? I don't know.
Yeah. How do you see that, Sophie? Because you live in the US, you live in San Francisco. How do you experience that? Like, are you happier in Switzerland even when you visit?
I mean, there is a quality of life in Switzerland that, that like no other place can compete, really, right? I can't wait. I'm coming back for summer, riding the bicycle around the city and people swimming in the rivers and everybody being outside. Like, I don't know, there is something to the quality of life in Europe. And I think that's why we're always, I saw that same statistic, Laurent, and I was also thinking, wow, that actually is really cool data, because potentially that means long-term talent actually wants to be in Europe, so meaning people would like to live there. So there is big potential of also building amazing companies there, because people actually want to be there. And I think for me, it's also like my ideal life concept is truly being in both places. And that's also what I recommend any founder we work with. We don't say like, oh, you have to like close shop in Switzerland or wherever you are, open shop in San Francisco. That's the only way to succeed. Like, not at all. I think really it's building in both worlds and both ecosystem. That's where I see the true win-win, right? Like, keep talent in Europe, keep building in Europe. R&D is great. We have amazing potential there, but then some of the sales and some of the fundraising and some of that strategy has to start moving to the US. And so, yeah, really playing it as a win-win in both ecosystems. Like, I think for me at the personal level, as well as in our portfolio companies, I think that's it. And if anybody who asks me, that's what I would recommend.
I actually see also that with our clients as well, a lot of them are doing that now, that they have, they have offices in both locations, and that they try to keep the R&D in Europe. Because also pricing wise, it just makes more sense by now, and talent is on the same level more or less. And then they're trying to move a lot of the sales towards US, because that's really where the revenue numbers will have to come from. So yeah, I think what you're saying, Sophie, a lot of companies are doing that, and then founders are traveling back and forth. Sometimes founders move over there, but not always. So I think, yeah, the best of both worlds is actually a good concept.
Sounds like a very Swiss compromise.
No, I think it's a win-win. I think it's not a compromise. It's a win-win, right? It's like, it's truly like 1 + 1 is more than 2 in this case. And I think the talent and like, that is a really good point, right? Like, the salaries here have become so insane, and also the competition, right? So there is so many offers floating around, specifically if you build anything in AI. Like, how would you compete with somebody paying like 1 million, 2 million or more in salary, right? And like equity packages and things like that. So the risk that your people are just going to like move on quickly is really, really high. And so it might just be more successful or more sustainable to, like Laurent said, build in Europe and then sell in the US, really.
Laurent, we're in the wrong line of business. We shouldn't be founders. We should be employees and doing just work for 4 or 5 years, and we have the life-changing money there, right, in the US.
Well, you have to be extremely good to be able to get to that, right? But yeah,
of course,
probably would be possible. Yeah. I
want to take
it. My co-founder, by the way, because he's very technical. He's super deep into AI. I'm always telling him, look, if we would fail with what we're doing now, you just move to the Valley, and in a year you're making the same money than you did here in 2, 3, 4 years.
Exactly.
For me, that's not possible. I'm more on the business side, so I would have to go through a bit more of a transformation to be able to do that. But that's just the way it is right now. If you're a really good AI developer or a forward deployed engineer or whatever they're calling it right now, you can make massive amounts of money, but you also have to be in a quite stressful environment. You will be working a lot, and you might be laid off in 6 months again, and you have to go to San Francisco, and you're not in Zurich anymore or wherever you are. So it's your choice. But I think if you are a good AI developer, engineer, whatever, chances are you're going to make a lot of money right now if you're anywhere in the proximity of the Silicon Valley.
I also want to take a bit of a contrarian take, just to have spice up the discussion a bit. Very simplified. He basically said, okay, if you want to make money, you have to be in the US. If you want to be happy, Europe is the great place to be. Now, if we very simplify that and look a bit from a different angle, you could also say, well, Europe had a thriving economy in the past, but we obviously have some challenges in Europe. So if we don't continue on a commercially successful path in Europe, or the money is flowing to the US because you sell there, you have the big market there, isn't that also going to hurt the quality of life in Europe in the long run if we sort of miss out on this earning potential, and we basically sabotage ourselves, that we say, well, it's great for the next 5-10 years, but what in 20 or 30 years, if we don't change something and become more commercially focused and have more commercial success as it happens in the US, we're basically going to ruin the life quality at one point because we simply run out of money.
That's a deep discussion to have.
Yeah.
We can do that for the next 2 hours. But I think in general, it's super simplified. But yes, in general, that is right. I mean, you see it with Germany, how they have been struggling for the last, let's say, 5 to 10 years. No growth really in real GDP at all. Wow, I'm saying GDPR. See what's happening to my
Maybe
brain?
that's the reason.
The overregulation.
Yeah, so you can see that this is a problem that we're facing, and it's not an easy one to fix that quickly. But if you take out the very successful tech sector in the United States, their GDP growth over the last 10, 15 years has not been any better than Europe as a whole, right? So just trying to show the other side. So what they did
Sure.
really well was they nailed this digitalization, social media, internet boom 20 years ago, and they're now reaping the rewards from that. And I think they're already on the AI train again with the same companies and some new ones, and they're going to reap the rewards for that as well. Maybe China is going to be able to be a counterweight, but Europe needs to start finding its own strength somewhere. And I think there's not going to be 10 different areas where you can be that strong. There's maybe 2 or 3 areas where you could potentially be the global leading economy in that sense. And I don't actually know what outside of AI and tech that should be right now. So there's probably experts that know that better than us, but we need to start making gains. Otherwise, we will be left behind at some point. Yeah.
Yeah, but the potential is there, right? For industrial AI, deep tech, biotech, climate tech. I think the potential is there. It's just now the willingness to think big and go big, you know? That's what something the US does really well. Yeah.
I know we could probably do a 2-hour podcast on this topic alone. So we're going to leave that here, and we leave it for another day where we can do a deep dive on that if we want to. I have one more topic to discuss, and it's something that is coming a bit from the US as well. I heard it on a podcast last week, I think. And Sophie, you mentioned Anthropic. It's the hot player right now. Everyone wants a piece of the cake in one way or the other. And something really interesting happened. So then you have sort of people investing in Anthropic, and then they sort of sell parts of their shares or rights on their shares, to be more precise, through an SPV. And then an SPV purchases into that SPV. So then you start to create layers of SPVs over SPVs, etc. And that is just quite crazy, because then you pay fees on all the different levels. Every SPV has whatever fees, like 20% and the closing fee or whatsoever. So first of all, do you see that like this is a thing that is happening in the US right now, and it could also like spill over to Europe to a certain degree? How do you like follow this structure? What do you think about it? Do you see it happening obviously in the US, but also swapping over to Europe?
Yeah, I mean, this is a very specific story also to Anthropic, right? I mean, I'm fundraising now for the fund, and I had at least 3 conversations with potential LPs who are like, "Oh, I'm trying to get an Anthropic allocation," and so and that just hasn't happened before. And so, whatever they can get, they just want to be in there, right? Before they IPO. So they're willing to ignore additional fee structures, ignore an additional like vehicle on top of a vehicle to do that. I don't think that will happen anytime soon in many other companies, right? This is very specific to super hyped, right? Otherwise, the SPV structure is something that we've used before. We also offer or thinking about offering to our investors. It's not general a bad vehicle. It's just kind of starts being crazy when it's one on top of the other and on top of the other. And investors don't really understand anymore who is making fees on what. But this is very specific to like the hyperscalers. I don't think we'll see that anytime soon in, more just good companies, let's say, not the hyperscalers. I don't know. I wouldn't worry about it too much, actually.
Because then if you don't understand that as an investor, although you should obviously understand that and read the fine print, but you can be the SPV of an SPV into an SPV, and then you make maybe a $100 investment, you make $200 in return, but because all the fees are being eaten up, you might make actually very little money off your quite risky investment. So it's basically other people getting rich off you instead of making you rich with your investment, and you carry all the risk.
But you can go around your dinner table and say, I'm an investor in Anthropic.
Exactly.
So that's what they pay for.
Yeah, it's a pure status game.
And Silvan, the guys that are, or the people that are investing in these SPVs, I assume they're professional investors, right? That's not the everyday Joes that
Yeah.
just put in 100K or something like that. So they should know what they're getting into.
That's
And
true.
otherwise, they're not doing their job well. Yeah.
Then we also don't feel sorry if they lose potential returns if they didn't do the job right.
Yeah, I mean, that's their business. They know what risk they're taking, and if they don't know, probably they're in the wrong business.
Yep.
And you'd be surprised what makes investors tick. Like the making money is really just one component sometimes, you know? Like it could also be, I want to be part of this, or I want to hang out with other investors who are invested in that, or they want to learn, or they want to have an impact, or they want to have a good story, right? It's like, there's lots of different reasons somebody invests that is not pure financial returns. Yeah.
Fair enough. Yeah.
It's
But I would say
true.
overall, a good red flag check is the SPV directly holding any shares or convertible loan or whatsoever? Or are there additional layers that you might not be aware of, or that you just might uncover by accident when doing your due diligence? So I think having direct holdings of the target entity is the core thing to look at here.
Yeah, and you can always ask the question, right? Like what's the fee structures and what's the waterfall like who is getting paid out when and how but like Laurent said, any professional investor should do that. So it's sometimes a little similar maybe with like opening a bank account, right? Like, oh, where are the transaction fees? Where how much are you holding? So it's the same type of due diligence.
Sophie, how is the situation or the feeling in the States at the moment in terms of IPOs? Because as we said, there were a couple of quite big IPOs lately. There's SpaceX coming up, which is going to be the most massive IPO of all time. Then there's probably Anthropic and probably also OpenAI. An IPO this year. So this is going to be a frenzy of IPOs that are hyped to the sky or to the moon or to the Mars. What's the feeling around that? Do you feel like investors are like they're all really, looking forward to this because it's going to be those big paydays that define the whole decade of their investment? Or what's the situation over there? Because for Switzerland, the Swiss investors, they're probably not part of this, and we're just going to watch it from far away. So we're not going to gain much out of it.
Yeah, no, I think it's absolutely the first thing. It's like, wow, finally money is coming back into the ecosystem, right? And lots of people are going to make tons of money. And these are LPs in funds. These are the funds itself. These are potential angel investors. So like most of them will just put the money back. And I have a lot of conversations with people who are like, we have this conversation. Oh, we want to get into Anthropic, but also, hey, we're waiting for liquidity. And as soon as we have liquidity, we're going to deploy again. And I think that was like the main pressure point now in the whole venture capital ecosystem was that we really had almost no IPOs for a couple of years. And that really froze everything. And now it feels like it's opening, and it's probably burst to open, which is, it's great. It's lots of people are going to make lots of money, and they're going to put it right back in. And this is exactly what we want.
So that's the question, or the follow-up question to me would be, because that's what I was assuming, because that's the whole game, right? But now what's going to happen then? Because is all of this money then just going to be reinvested again into the US-based startups? Is Europe going to lag even more because of this super year that we're about to have in IPO terms in the States? Or do you feel that there's a lot of it is also going into Europe and Asian companies at this point? Or how do you see the market? I mean, you cannot predict the future, obviously, but what is your feeling based on what you hear and see?
I mean, it's definitely what I'm pitching, right? Because we, as our fund, we're investing 2/3 in Europe and 1/3 in the US. That's kind of the overall strategy. And so when I'm talking to, and I will talk to a US LP right after this, and this is exactly going to be my pitch, is like, hey, there is so much potential in Europe and it's overlooked, right? If you keep investing in the US, everybody's investing in the US. The valuations sometimes are just double, right? And it at all stages, right? So you can actually make really smart bets now in Europe, and that's what we're pitching. It's basically I describe it in my pitch deck as European companies are like raw diamonds, right? They just need to be polished a little bit and then scale. And I think that's let's see. Let's talk in a year, like how it actually will pan out. I do know that lots of US LPs and investors in general have a certain arrogance. They're like, hey, my US portfolio has just performed better. That's where I keep investing. And so I think some of them will still maybe want to see like really good European cases that really scaled up. And then maybe you have some of the braver ones who go before the wave and say like, yeah, I can see that there is potential and I go in there before everyone else is. So that's my pitch. Let's see how successful I will be. But I think it's definitely a great opportunity for US investors because I mean, we can see it. Like every round is less competitive, valuations are lower, there is less like a fight around like, how can I get into this deal or not, which is very much a US story, right? So there's way too much capital like chasing the same thing. In Europe, we don't have that problem.
I think that makes a lot of sense. And it's also true, right? You can show on paper that the valuations are lower for the same stake. However, one would then probably come and argue, well, but also the returns and the exits are way smaller, right? So that's why you cannot have the same valuation.
So what did and it's true, right? There is almost like a cap on how big a European company becomes. And that's, I think, the issue. Like we have to try to remove that cap. Everything else, I think, is in place now. And now we have also these bigger rounds and things are moving faster and it's happening, but there still seems to be somehow a plateau. And removing that. And that's also, again, part of our thesis of, having legs in both ecosystems and not just think at a European scale or at a Swiss scale. We'll see. I mean, we had already in 21, Laurent, to your question again, like when things have gotten really hot, all the VCs funds started opening offices in Europe. Some of them shut down in the meantime. I think we might see that again. Because they will have to spread. Yeah.
And that could be. There were a lot of them saying, now we need to invest in Europe because there's really simply no place to put money now anymore in the US if you don't want to invest into a pitch deck alone, right? So I remember that. Yeah.
Yeah. And this could happen again. Yeah.
Exciting times for sure. Since we're talking a bit about the future, I also want to take your pick or your take on the sort of near future. Laurent, if this pace continues into the summer, strong rounds, international validation, EPFL talent at global IPOs, big exits in Europe with potentially billion-dollar valuations, what would be the positive scenario, or how would the positive scenario look like for the Swiss ecosystem going into the summer and beyond?
I think there's a lot of really, really good traction happening in the last 2-3 months. And we've been saying big numbers, so I think we should continue doing that. So I think that if this continues, we will probably see by far the strongest year in venture capital that we have had in Switzerland. But it's still going to be driven by a handful of deals and not by a broader market in that sense. What gives me a lot of positivity is that there's more and more deep tech, robotics, AI cases there from Europe or from Switzerland that I haven't seen so much about in 2-3 years ago. So this seems to be really a super fast up and coming segment for us. We've been always talking about it, but so I think we will see more bigger rounds in that area. Biotech will stay strong, and I really hope that there will be a couple of really, really big exits. And yeah, if that happens, we will also have more money flowing into the Europe ecosystem again, and I think that's really what we need. That's besides those big IPOs in the States, we also need a couple of those liquidity moments in Europe that are huge in order to be able to keep pace up.
More billion-dollar exits or more than that.
Sophie, and I think don't underestimate also the signaling of all of this, right? Whenever there is a successful IPO that signals to the entire ecosystem, hey, this can happen and I want to be part of the next one. So even if the exits, the big IPOs happen in the US, it still creates this, optimism and still creates this like, hey, I want to take this risk on the investor side as well as on the founder side, which is really going to fuel any ecosystem, right? It's not just the money that's flowing back, but it's also the success that everyone is seeing. And then you're also like things getting more competitive. So as soon as you have several companies battling before an IPO, they're going to do acquisitions because they need to stack up. So it like would also trickle back to the early stage startups, the entire thing. So I think it's that kind of unlock we've been wanting to see
Yeah.
happen.
And
Yeah.
if you see someone doing it and actually walking what you think is almost impossible to achieve, and then they just do it, you say, oh, it's actually possible. Maybe why aren't we the next ones and do it as well and go public in the US or wherever? I love
Yeah.
that sort of role model function.
Yeah, it's role model, FOMO, all playing at the same time, right?
And on the other hand, not to be a party pooper, but Sophie, what would like be warning signs or red flags that the market is becoming too concentrated or too dependent on just a few sectors? We always talked about the sort of concentration in the AI space at the moment, for example. So when is that becoming too much or too dangerous from an ecosystem perspective?
I honestly, I think it's too dangerous already, right? Like, I mean, the allocation of like what I said before, like 60, 70% into AI and that into 5 companies. Yes, some people will make lots of money, but many more people will lose a lot of money also, right? There's lots of companies that are not going to make it, right? And, so there will also be a correction there. Yeah, I don't know. I think we're already in a dangerous space. For sure.
I think we're already past the most dangerous part, because the concentration is around those companies that will go public in the next year, most of it. So you're right, Sophie. I think a lot of them around them will die and will not get to anything. But the money has already been deployed, and it has been not deployed to the companies that we maybe wanted it to be deployed into. So yeah, maybe it takes a while still until we see the repercussions from it. But I think we're already at the point where the damage is done. So I don't think it's going to get more concentrated and more difficult. I think afterwards it will actually start spreading out again, because the money will flow out, and there's not those 2 hot companies that are now the next ones we need to go for. So I think we will now get hopefully into a phase of 2-3 years where it's going to broaden again a little bit more in terms of investment. That's my hope. But yeah, I agree. We're in a super concentrated and difficult space right now.
Yeah, and then you hope that all those good companies that are being built right now are still around when that money flows back into, good companies versus only hyperscalers, right?
Absolutely.
Yeah.
Hopefully.
Yeah.
Wonderful. That is a wrap for the 5th episode that we did together on the Swisspreneur Briefings. Laurent, Sophie, thank you so much for being here. It has been an absolute pleasure. Thank you for your insights, for the fun discussions, and all the best. See you next time.
Thank you
Thank you for
both.
having us.
Thank
See you.
you.
Ciao.